Good morning. Welcome to Bazaar Morning Call. On behalf of me and my co-anchor Nigel, who's a Christmas gift to all of you, a very happy Christmas to all our viewers. May the Yuletide bring you, more cheer, more prosperity, better health, satisfaction, and let us hope that the red on the screen blows away.
Well, morning, Lata, and wishing all our viewers out there a very, very Merry Christmas. One thing's for sure, Lata, Santa's a bear this year. Because just looking at the way the US markets are crumbling, Santa is definitely a bear, and we'll tell you what all Santa has for you. But otherwise, the global setup is not looking very, very good. It's Christmas week. Everyone talks about a Christmas rally, Santa rally. That's not happened at all.
Absolutely.
And things have not looked good at all, Lata.
That's true. Santa is hopefully will bring gifts in the coming year. But at the moment, clearly Santa is not in a mood to, handle out gifts. So let's just put that data. What have we woken up to? We closed on Monday night, and thereafter we saw Christmas Eve fall of 3% on the Dow. It's a big fall. It's actually 2.91 to be precise. 653 points loss on the Dow. And the very next day, Japan traded and Nikkei was circuit down 5%. They had to shut trading for a bit because they were circuit down. And okay, maybe recovering now, but still 5% down. And then was Crude. Crude fell another 7% on Monday. And that was bringing it down to all the way to $50. Of course, fears of US government shutdown. But it's more really the global growth worries. So really, the message we got on Monday night after we closed trading was that everyone prefers gold and bonds. So bond yields go down and gold price go up.
That's right. Lata, but you're talking about crude prices collapsing. That's on the global economic growth fears. That should be a good thing for India, right? But this time around, how will things play out?
Well, India does benefit when there is a fall in crude prices, and we tend to outperform other markets. We fall, but we fall less than others. But, this one looks like a very big scare. So let's just brace ourselves. We got some cues on Monday itself. Monday, if you remember, the crude price had fallen from 57 to 53 or 56 to 53. But what happened? You saw the rupee fall. You saw bond yields rise from 7.22 to 7.3. And you saw oil marketing companies actually in the top 5 losers. You had IOC and BPCL. They should have gained, So the growth fear also hits all these stocks, and the fear that people will start taking off money regardless. And I just want to put in, into perspective the fall that we have seen across the world. We keep talking about the Dow, and yes, Nasdaq entered bear territory last Friday, and S&P entered bear territory. That is, it lost 20% on Monday. But that's not the only indices. I mean, the DAX has also entered bear territory this year. That is 20% from this year's highs. The Shanghai index is also down. Shanghai and Hong Kong Hang Seng index are in bear terrain this year. Therefore, it doesn't look like it's a one-continent thing. It's a bear stalking across the globe. So, we must be prepared for that. India is down only 10% from this year's highs. August highs, 11,800. We are down 10%. The fear we should have is that people normally take away money where it is available. So if there are global hedge funds who want to take profits before the year is out, we could be a sitting duck for such kind of people. But what is the trade setup telling you? Does it look like FIs are on selling mode?
Well, Lata, first I just want to clear something with regard to the SGX Nifty. It's indicating green, but you have to always look at the SGX Nifty and look at what the Nifty futures is. So the SGX Nifty is 10,630. You'll see it's indicating a green tick. That's not to be. The Nifty futures actually ended at around 10,680 odd. So if you just need to take that difference out there, that means that the Nifty is going to start off with a cut of around 50 to around 60 points. So let's get that out of the way. We are bracing ourselves for a bit of a downtake. Last few days, the Nifty is down 300 points. The Nifty Bank is down 500, 600 points. So in short, in the last 4 trading sessions, after getting that 60-point downtick, we'll be 360 points down in just 4 trading sessions. What happens from there? The FIs are net short. That we already know. And they've been adding few short positions. So 53% of their positions are on the short side. The good part, Lata, is that they have cushioned themselves. They're bracing themselves. In case there's a fall, they bought puts, and they bought puts big time. When you buy 20,000 contracts on a single trading session, that's telling you they're bracing themselves for a bit of a fall. So what are the levels you're looking at? Now we're going to start off closer towards the 10,620, 10,630 odd mark. 50 DMA comes in at around 10,580. The bulls, even if you have to see selling, they're going to do their best at least to hold on to that level.
10,580.
Exactly. And at some point of time, if you see a bit of a recovery, the recovery is going to invite selling again. The only hope for the bulls really is that tomorrow's expiry. So today, there could be some shorts that will look to cover up periodically during the trading session. 10,580, that's the crucial mark for today, I would say.
How
the 50
short
DMA.
is the market? Is it seriously short?
No, the market is 53% short. So more shorts than long is what we are saying. But cushion is there on the downside in terms of puts. But, Lada, you're also looking at the volatility index in the United States, the CBOE volatility index. What's your observation there?
I'm looking at the vols because of the kind of statements we are getting from President Trump, firing the Fed chairman and repeatedly trying to influence decisions over which past presidents have not tried to do. And, US interest rates are the interest rates of the world. The US currency is the currency of the world. So if there are worries over the US currency, then you can look at the fear. The volatility index is the fear index. You buy more of this index when you are scared that things might go awry. And on Monday, only on that single day, the volatility index rose by 20%. It was 30 at the start of the day, it ended at 36. Now, just look at the week ago. A week ago, it was 24, which means the fear index has risen by 50% from week ago levels. Month ago, it was 19, which means it has risen 100% from month ago levels. But worse is yet to come. If you look at the 6-month ago period, the volatility was about 13. So, we have risen about 275%.
Right.
And if you look at Jan 1st, 2017, which is basically 1 year ago, the fear has risen 400%. So, that satisfaction that things are reflecting growth is no longer there. And when you have so much fear, you're bound to look at people taking away profit before the year is out. That is my big fear. The fear index and its, extreme rise in the last 5 days.
Yeah, that's right, Lata. And all of a sudden, people are again talking about that 2008 and also, it's getting a little fearful out there. And if the government of India and the RBI were not on the same page, supposedly, that's okay. But here you have it openly. President Trump is saying he's definitely not on the same page. He believes they are increasing interest rates way too quickly. Though he's given his view as well, in terms of he believes that all this is a buying opportunity. So quite interesting statements coming out of there.
Yeah, I don't think ever before a president or any head of state has been giving stock market advice. That's new, but then everything about Trump is new. Well, so we are looking at, a 2018 which has not been very helpful for the bulls. Bulls have entered Boxing Day with a big punch on their face. But let's see if they are able to find some salve in the last 3 trading days. It's time we got you some advice. Let's take a look at what wise men are telling us before we start trading. This one comes from Rhythm Desai of Morgan Stanley. Rhythm says, despite the shifting key debates through the year, from valuations to earnings to rates to oil currency and now elections, India has outperformed emerging markets by a significant margin in 2018. He says India will end 2018 as the 8th best performing emerging market. Well, that's the solace and that's also the fear. Precisely because there's money here, will people come to take it?
Take it off the table. All right, let's get you some money market views then. Pramit Brampart of Veracity says that crude has crashed, which will help the rupee gain. He expects the spot USD INR pair to trade in the range of around 69 rupees 50 paise to around 70 rupees to the dollar.
And some advice on bond markets. Dhaval Dalal of Edelweiss says the 10-year benchmark bond yield has been consolidating near a technically important level of 7.27 to 7.30 for the past few trading sessions amid declining trading volumes and a lack of economic data. He says market participants await the next fresh set of data in early January to get fresh cues on the economic front, as markets seem to have a divergent view on the US economy as compared to the Fed. He expects the 10-year benchmark bond yield to remain range-bound in the near term as market participants focus on the developments on the fiscal front.